Welcome to Bloomberg Markets. I'm Scarlett Fu. True to our show's name, let's get straight to the market action. We have a relief rally on our hands with the S&P, NASDAQ at session highs. 10 of the 11 groups in the benchmark index are in the green, with big tech leading the gains. So you see the NASDAQ 100 up by 2%, leading once again, in fact. Treasuries are also gaining ground, led by shorter maturities, thanks to more evidence that inflation is cooling, which of course reinforces expectations the Federal Reserve can move forward with a rate cut in September. You can see the two-year yield coming down 6 basis points to 3.95%. U.S. dollar also resuming its decline, off by 0.25%, now down for a third day in 4. Let's look at midday movers, because usually the Mag 7 top the leaderboard of the most actively traded stocks by value. But today, you have 2 restaurant companies in the top 10. Starbucks up more than 20%, the most ever, by the way, after ousting its CEO and announcing Chipotle's chief executive Brian Niccol as the coffee chain's new leader. Chipotle shares falling as much as 14%, paring its decline right now to just under 9%, so recovering a little bit here. Also, we're following Hawaiian Holdings as the deadline approaches for the DOJ to challenge its merger with Alaska Air. Hawaiian shares were down as much as 16% today, but again, trimming those losses a bit here. But it was really this morning's inflation report that set the tone for markets. Here's the interpretation from Matt Luzetti of Deutsche Bank.
You still do have inflation that's above target, but I think inflation risks have really dissipated. And so I think the Fed should be very comfortable cutting rates. Should they go by 50 basis points? You know, the market has been priced kind of 50-50 for that at this point in time. I think the data will determine it. So if we get confirmation in the next jobs report that the latest weakness was real, then I think it could be quite likely that the Fed cuts by 50 basis points. If you see a reversal of some of that weakness, which is my baseline expectation, if you have the consumer continue to come in resilient, then I think that the Fed can have a path here of going by 25 basis points at each meeting.
Joining us with more now is Bloomberg chief U.S. economist Anna Wong. Anna, I was looking at the numbers here on EcoGo, and headline PPI did come in cooler. But when you strip out food, energy, and trade, so I guess that's an expanded version of core, that rose more than expected, up 0.3%. So on the whole, reinforcing that cooling inflation narrative. But I wonder if you're concerned about this ex-food, energy, and trade number.
Yeah, I think, in fact, the relevant items to look at in PPI is even narrower than that. It's really airfares, hospitals, and healthcare, and also financial. And I think all 3 of those came in line with our expectations, which means that the core PCE deflator, which is the Fed's preferred measure, likely would come in around 0.2% in the month, which means the year-over-year inflation from the Fed's perspective, the measure they care about, would be ticking up from 2.6 to 2.7% in the month. So the news is not as bright as the PPI, in other words.
Okay, got it. One thing that the PPI report did feature was the first decline in services costs this year. That sounds kind of significant. Is it actually meaningful, Anna, or are there one-offs in there that we should be mindful of?
Yeah, so, you know, PPI is a measure that mostly covers goods sector. So I would not be looking to PPI to give me a signal on services inflation. On the other hand, tomorrow's CPI would be the key. What happens to services categories such as lodging, vehicle insurance, vehicle repairs, we'll be looking at that, because that would have huge implications on core PCE deflator, which has a substantially higher weight in services inflation than the CPI or PPI.
Yeah, and that vehicle repair price increases has certainly fed into auto insurance as well, which you mentioned earlier. So I guess put this all together, Anna, how does this set us up for tomorrow's CPI release, which tends to get a lot more scrutiny from not just investors, but also the Federal Reserve?
Yeah, we are also expecting a very soft core CPI reading. The market consensus right now is for a 0.2% monthly increase. We actually expect 0.14, which rounds to 0.1 on the Bloomberg terminal. I think the markets will like it, because I think, as Matt Luzetti says, it creates a path for the Fed to lower rate in September, if not 25 basis point, if not 50 basis point, maybe a 25 basis point cut. Of course, all that matters, as Scarlett, as you mentioned, is services inflation, because that has a lot more weight in core PCE, and we are on the lookout for what those services category will show in CPI.
So big picture, Anna, is inflation moderating because demand is softening or because supply chain disruptions are no longer a factor?
So, I think it's the former reason. So supply chain effects has largely dissipated over the past year. So really what changed this year is core services excluding housing, as well as housing. So I think tomorrow one of the big story coming out is that discretionary consumption categories such as hotels, airfares are driving the disinflation. And that reflects the fact that many people are pulling back on travel this summer, maybe due to excessive heat in July, but also to large part because people are increasingly feeling stretched in their finances.
Okay, so we're expecting inflation, not just from today, but from tomorrow, to really reinforce the idea the Fed will move ahead. And of course, that next Fed decision won't come until September. There is the Jackson Hole speech before then. Do you think Jay Powell has already written his comments?
I think that he would have written his comments, or his advisors and his staffs would have written the speech for him after the CPI. I think he's really looking to see whether he can pencil in that sentence in his speech that says, we have gained more confidence over the past couple of months. In fact, sufficient confidence enough to begin the dialing back monetary tightening. I think he's thinking to himself, can I write that phrase here? Is there enough evidence to have sufficient confidence?
And that CPI report should give him that confidence to be able to say more or sufficient confidence?
Depending on how good it is. So if in fact it is true that tomorrow we're going to see a 0.1 core CPI reading, which is lower than the consensus, I think that definitely does boost their confidence.
All right, good stuff. It's either going to be more confidence or sufficient confidence. And I really appreciate it. Bloomberg's economics chief U.S. economist Anna Wong there on the CPI report due out tomorrow. Coming up, Home Depot renovating its annual sales outlook to plaster the holes left by waning consumer demand. That is our stock of the hour next. This is Bloomberg. This is Bloomberg Markets. I'm Scarlett Fu. It's time now for the stock of the hour, and we're watching shares of Home Depot, which reported same-store sales that lagged behind street estimates. And Home Depot is cutting its full-year revenue outlook as a result. However you look at the stock, it is moving higher in the session. Here in studio now to offer her perspective on what's going on is Laura Champine from Loop Capital Markets. Laura has a hold rating on the stock. And Laura, you had said in your report that this earnings report really requires some interpretation. What do you think the headline numbers fail to illustrate on their own?
So the headline numbers, they beat in revenues and earnings. They did guide down on same-store sales, that's true, but their results will be somewhat obscured by this SRS acquisition they made. One really interesting point from their call today is that they will start to include that in their same-store sales back half of next year, which is pretty unconventional and should prop them up pretty nicely back half of 25.
Okay, so something to look ahead to, and certainly something for you and other analysts to start penciling in. One thing that was notable is the key quote from the CFO on the results. He said consumers who have the means to spend have a deferral mindset. Clearly, lower interest rates is kind of the thing that would shape people's willingness to spend money. But that is out of Home Depot's control, right?
Right.
Are you hearing anything from the management about strategies that they're employing to get consumers to spend, whether it's promotions or anything else?
They made clear on the call today they don't want to be promotional. They want to focus more on everyday value pricing, which for them will mean more private label, more owned label product, and they'll always have a good opening price point. They're almost always very competitive with their competition, but because of their size, they want to be really careful about not dragging the market down to lower prices. They also called out inflation and labor costs, and they're still absorbing some inflation in transportation costs, which have been slow to adjust. So they need to be careful on pricing.
It goes back to that idea that a weak consumer, though, is something bigger than Home Depot or the industry. It speaks to this cyclical downturn. So what does management really need to do until things turn around? Is it a matter of coming up with a better strategy or just executing on the existing strategy they have in place?
So they've given us kind of a shiny object to focus on with the SRS acquisition, which is in Complex Pro. Not much they can really do to move remodeling. They finally are talking about some of the real issues, which is that if homeowners have a 3% mortgage, even if rates go down to 6%, that's not attractive money when you're rolling on your 3% mortgage.
Yeah.
So it's going to be tough to see turnover spike without a dramatic retrenchment of interest rates.
So then let's talk about the pro market for a moment here, because what is the total addressable market for professional customers versus the DIY consumers, the homeowner who wants to, just spruce up the home a little bit?
This pro market, especially the SRS one, is much smaller than the DIY market. It's about a third as large, but still, Home Depot considers itself as having only 17% market share today in its addressable market. So they think there's plenty of room to grow. And the SRS deal does give them capabilities they didn't have and sort of a set of muscles they haven't known how to flex. So one of the things they commented on is they'll use SRS as trade credit for a company as big and complex as Home Depot to need to acquire a much smaller company to get that functionality. Just shows you how tough it is to be a non-specialist going after the pro.
Yeah, absolutely. So where do the pros go to right now? I get that they go to SRS, but is it a fragmented market, or does SRS own a big chunk of that professional market?
It's extremely fragmented. They have a good chunk, but part of their strategy has been to grow through acquisition. It's usually these contractors, whether they're landscapers, pool guys, roofing guys, they sort of have a guy. So they'll call him, and it's kind of an entrenched business, which is why you have to buy it. It's much easier to buy it than to build it.
Okay. Does this put pressure on Lowe's to do something similar, given that Lowe's would face similar headwinds that Home Depot is currently facing?
We suspect that perhaps Lowe's bid against Home Depot and Home Depot had deeper pockets, but that is our suspicion. They certainly haven't said that. Their party line is that they're going for the small and mid-sized pro, and that makes some sense given where they are. They're just many years behind where Home Depot is on this market. They still have lots of room to grow, though.
Is there anything on the technology side that Home Depot can leverage to at least buy some time until it gets to a point where interest rates are lower and home buyers and homeowners come back in force?
Given their size, there's very little they can do to drive their comp higher, especially with that DIY customer. They have the share they're going to have. The only way to really grow would be to move locations, and they own those locations. As you know, those are huge boxes. That is a mountain too big to move.
Got it. So what are the implications for Lowe's from this earnings report for Home Depot? What will you be looking for when Lowe's reports in exactly 1 week?
Yeah, I got to say, Scarlett, it's not great. So it's the DIY numbers do have to come down. Their comps do have to move lower, and we all have to focus for Home Depot and Lowe's on when does this turn.
Yeah.
So is the turn back half of next year? Because many of us were expecting back half of this year. I think the bearish question that some investors are asking is next year even a growth year? And I think the jury's still out on that.
How long does it take for the Fed to cut rates and for Home Depot to start seeing the benefits of that?
Normally 6 months. So the question, but normally we don't see interest rates having moved as high as they have from such a low base. So it's unclear to me whether it will be that quick of a bounce back this time.
Given the higher for longer environment we're currently in.
Right.
All right, Laura, great to speak with you. Laura Champine over at Loop Capital Markets with a hold rating on Home Depot. The other companies that we're looking at today, of course, is Starbucks and Chipotle. Starbucks today naming a new chairman and CEO. He is Chipotle executive Brian Niccol. The move has boosted the coffee chain's shares today in a big way. Elliott Investment Management, which is one of the largest investors in Starbucks, is an activist investor and released their reaction, saying, quote, "We view today's announcement as a transformational step forward for the company. We welcome the appointment of Brian Niccol, and we look forward to continuing our engagement with the board as it works toward the realization of Starbucks' full potential." With more on this, we're joined now by Bloomberg Opinion's Andrea Felstead. Andrea, really good to speak with you. What do you make of that reaction from Elliott on Starbucks? Because you could argue that Starbucks really pushed the final ouster of the CEO from Starbucks.
Elliott hadn't come out publicly and called for the exit of Lakshman Narasimhan, but they do seem to have welcomed it, and the share price reaction just shows you that other investors feel the same, and there's a lot of hope riding that he can do for Starbucks what he did for Chipotle.
In terms of strategy, what will you be looking for from Brian Niccol when he takes the reins at Starbucks at the start of next month?
This isn't a sort of, classic kind of activist activist playbook. There's no sort of breakup, spinning something off and it lifts the share price. This is about doing sort of lots of little things better. So things like, dealing with the queues, making stores, more pleasant, safer places to spend time, engaging staff, giving better value for money, reconnecting with customers. It's all these things that are not rocket science, but Starbucks, really needs to do them.
Right. It's executing on the existing strategy better and really paying attention to the details. So what does Nicole's departure mean for Chipotle from where you sit? I mean, they have an interim CEO in the meantime, and it is someone from within the ranks. And I know Brian Niccol deserves a lot of credit for keeping things buoyant over at Chipotle. Is the current management team able to build on that?
Well, hopefully they'll just be able to keep things going. They have really, they've really outperformed. And they've had customers trading down, and we've been hearing over the last few weeks, and you were just talking about that the consumer environment does seem to be weakening, particularly for the lower to middle customers, but also some worries about the top end. So Chipotle should still be able to capitalise on the platform he built and the consumer sentiment from here.
You write so eloquently on the industry overall. I'm curious to get your take on what you think Chipotle's rivals are probably thinking and considering right now, given there's a change not of their own choosing at the top. I mean, how might they want to take advantage of this unexpected news?
They're probably rubbing their hands together. It's been an amazing performer. The share price has been on a tear. They're probably looking at ways to attack that customer base.
Yeah, no doubt. Thank you so much. Bloomberg opinion columnist Andrea Felstead joining us from London. Really appreciate your staying late to give us some more context on this ongoing story. It's, one big move flipped the fortunes of two of America's biggest food companies, consumer companies, restaurants, and these are all, of course, household names that we're all familiar with. Speaking of household names, coming up, Alphabet is set to unveil new hardware today. Will the new tech change investor sentiment? Google hardware is to come in the next hour. We're going to break it all down next with Ed Ludlow of Bloomberg Technology. This is Bloomberg Markets. I'm Scarlett Fu. In just a few moments, Alphabet is expected to begin a highly anticipated hardware event. The new product unveil is likely to focus on AI, and investors are hoping this might slow down a sell-off that's erased more than $360 billion in market value from the company over the past month. Here with more on what to expect from the event today is Bloomberg's Ed Ludlow. And Ed, we're talking about the Google Pixel phones that some people have, but most people don't necessarily have. These are not big revenue drivers for Google and parent company Alphabet. They feel more like a rounding error in terms of contribution to revenue and the bottom line.
Absolutely. If you look back at the last 4 quarters, say, it doesn't really even register in the sort of roadmap of revenues. But the AI story is very simple, that as consumers around the world, we're still trying to work out how our own use of AI manifests itself in the real world. What we're expecting is yes, new generations for hardware with Pixel, but Google to tell us how Gemini, its large language model, which focuses on text, image, and voice, is actually going to be used, like basic stuff, on the handset, and has been well told by many chip companies and academics. A human's interaction with a chatbot or generative AI tool is very likely to take place on our smartphone because it's what's in our hand most of the time during the day.
So does this mean that this new Pixel phone will be available to consumers before Apple's iPhone 16, which is supposed to also be AI capable and AI enabled?
It's a great question because the fate of the stock, which is off like, 15 or 13% since its July peak, is so closely tied to demonstrative examples of AI working. BI is focused on this idea that Apple and iOS, its competing OS, is going to have a staggered rollout of Apple Intelligence, the AI features. But what we're talking about is Google shipping maybe 10 million units a year of its Android-based smartphone or Google-based smartphone. How many factors greater than that iPhones exist and ship around the world? So many. So it's a competitive element to pit them to market, but it really will focus on what can you actually do with a Google AI tool or large language model on a Google-made device. And that simple question is definitely TBC.
Yeah, there's a lot that's TBC. I think about how there are so many ads for Gemini during the Olympics, and people didn't necessarily walk away having a very clear idea that they needed this product or what this product could do for them. When we talk about the AI capabilities that Google is trying to offer, are they tied to the Pixel hardware, the Pixel phones themselves, or is that software available on Android OS and therefore available on LG phones, Samsung phones, and any China-made handset maker?
It's a really good point. It's like I'm a Google household. You know, we use Google Calendar, Sheets, Gmail, etc. But I use it through the applications on my iOS phone, my iPhone. And I think that, you know, it's the functionality of the app or software itself. If you go back some of the risk events that the stock has seen for Alphabet, I'm talking about, in the last couple of years, it's places where Gemini has been shown to make mistakes. But they've also shown its integration with basic software offerings from Google, those platforms I listed, as working quite well. You know, Gmail predictive and analysis is a good thing.
Very quickly, Ed, is this something that analysts are talking about, that people in Silicon Valley are talking about? Does it have any buzz?
No, just infrastructure spend, CapEx, and then eventually top-line growth through software sales. That's the story here right now.
All right, good stuff. Ed Ludlow, thank you so much. Bloomberg Technology co-host Ed Ludlow with the latest Google hardware event that is coming up in just minutes. I'm Scarlett Fu, and that does it for Bloomberg Markets. Keep it here. We're going to have more coverage of balance of power, of the elections, of politics. But in the meantime, you have the S&P 500 at session highs, up 1.5%. This is Bloomberg.